Greetings, professors. Today we would like to present our group project on TAOHOOZAN Co Ltd. I will begin by introducing the company overview and analysis. TAOHOOZAN Co Ltd was founded in 2011 and is a leading Thai brand of premium ready-to-drink fresh soy milk. The company focuses on high quality, using organic soybeans and representative-free production. Under the slogan, "Quality we dare to let your loved ones consume," the company's mission is to deliver healthy soy milk products for consumers, especially those who are lactose intolerant, while expanding sustainably in the Asian market. The organization is led by a CEO with three main functional departments: the production department, marketing and sales, and accounting and finance. In its value chain, TAOHOOZAN emphasizes strong inbound logistics, efficient product processes like mixing, pasteurization, and packaging, and effective outbound logistics through distributors and third-party logistic providers. TAOHOOZAN uses a differentiation strategy by offering non-GMO soybeans, fresh daily production, and no representatives. The product is priced slightly higher to reflect quality and is promoted through health-focused campaigns. The company applies a balanced scorecard approach, focusing on sales growth, customer satisfaction, low defect rates, and employee training to ensure long-term performance and quality improvement. The company identifies key critical success factors such as product quality, cost efficiency, supply chain reliability, and customer satisfaction. These are measured using performance indicators like defect rate, unit production cost, on-time delivery, and customer satisfaction score. TAOHOOZAN's strengths include a healthy brand image and natural ingredients, while weaknesses are high costs and short shelf life. Opportunities come from the growing plant-based market, but competition and fluctuating soybean prices remain challenges. TAOHOOZAN offers a variety of flavors, which is original, no sugar, strawberry, chocolate, black sesame, and basil seeds, with prices reflecting it.
In purchase order, we purchase raw material for producing our product to meet the customer demand. In purchase order, we purchase raw material for producing our product to meet the customer demand. We use quotations to track customer demand, and the issue status mean that the tag invoice had been already created. The grand total at the bottom summarizes the overall quotation value. The grand total of our asset and expense is 824,210.1. For our asset, it can be categorized into products and equipment. And as you can see, we currently offer 6 different products. Looking at the data, our original flavor is clearly the top seller. Here are our equipments. These are recorded as asset on the debit side. As shown here, we logged the washing, grinding, and pasteurizing machine, totaling 150,000 baht including VAT, with the corresponding entries under trade payable. For our expense, the cost of goods sold, we use the perpetual method, with each month expense is recorded on the debit side, which built up our accumulated balance. By the end of June, you will see that the final balance reaches to 661,253.37 baht. Is this reflecting our total production cost of the period? Revenue from sales of goods or income earned from selling physical products is correctly recorded on the credit side. Each cash sale is posted to reflect income generated from completed sales transactions. This builds a clear running balance that accurately shows to our revenue. The contact shows our supplier company name. This is a list of our customer name and information who buy our product.
For customer payment, TAOHOOZAN uses a full payment system. Both small retail customers and large retail companies are required to make full payment on the delivery date. This helps the company reduce credit risk and maintain stable cash flow transactions and adjusting entries. This includes owner investments, pooled funds, machinery purchases, insurance, and raw material expenses recorded at cost of goods sold. Adjusting entries for depreciation and prepaid insurance are recorded when required. Transactions related to tax filing are also recorded through journal vouchers.
For our prepaid insurance, the company purchased a 12-month policy for 10,000 baht. As shown in the entry, we debit prepaid expense to record this as an asset with a corresponding credit to cash. This ensures the transaction is properly recognized before any adjusting entry are made at the year end. Moving to the adjusting entry, now recognize the insurance expense for past 6 months totaling 5,000 baht. Following proper accounting rules, we debit insurance expense to record the cost used and credit prepaid expense to reduce the asset value. This adjustment accurately reflects our current financial positions as of June 30. For our depreciation, we have 3 machines with 5-year useful life and 0 salvage value, resulting in an annual depreciation of 10,000 baht per machine. Since our current period end of June 30, we've calculated 6 months of depreciation and it's totaling 15,000 baht. We're recording by debiting depreciation expense and crediting accumulated depreciation to accurately reflect the asset value.
VAT filing and payment are performed at the end of each month. This slide shows sales by customer. This slide presents sales by product. It highlights top-selling products and lower-performing ones, supporting decisions on production and inventory. This slide shows expenses by categories.
Trial balance confirmed that all entries are in balance with the grand total of debit and credits matching at 5,374,092.78 baht. This ensures that all asset, liability, equity, revenue, and expense have been recorded accurately. Our income statement summarizes our financial performance by subtracting our expense including cost of goods sold, insurance, and depreciation from our net sales. Our balance sheet summarizes our position as of period end. We report total assets of 4,633,071.6 baht, primarily driven by our cash equivalent. This is balanced against total liability of 184,487.61 baht, consisting of our current tax obligation. Our statement of change in equity reflects the overall growth of the business. It combines our initial authorized share capital with retained earnings generated during this period. This shows how our net income has directly increased the total shareholder equity, strengthening our internal capital base. To summarize our company operation, the company has operated for a total period of 6 months from January to June. The profit of our company is 1,949,283.99 baht. Cost of goods sold margin is 25.09% of revenue, and the debt ratio is 4.02%. Net profit margin is 67.91%. Over the 6-month operation, the company demonstrated a strong financial performance with an effective cost management and a low debt ratio, contributed to a strong net profit performance, indicating the financial stability and growth potential.
The company produced 6 standardized flavors of soybean milk through 5 production processes over 6 months. This presentation explains how unit cost is calculated using process costing combined with ABC, and how the results support managerial decisions. TAOHOO use process costing because production is continuous, large-scale, and homogeneous. All 5 flavors pass through at the same 5 processes, and production follows a make-to-stock strategies. Assumption: production volume and output per process are assumed to be stable over 6 months. Although process costing is appropriate and single volume base rate cannot allocate overhead accurately, therefore, ABC is applied within process costing to allocate overhead based on actual activities. Key reason: different flavors consume activities at different levels. Direct production costs include materials, labor, and machine usage. Ingredients vary by flavor, which affect material cost per unit. Assumption: ingredient prices are assumed to be constant during the period. Activities and cost driver: each activity is assigned an appropriate cost driver, such as machine hour or labor hour, to affect actual resource consumption. Labor and machine hour. Labor hour and machine hour are collected by department and activity and used as base for departmental and ABC overhead rate. Labor efficiency is assumed to be similar across all flavors.
Manufacturing overhead represent indirect production costs. This cost cannot be tracked directly to individual products. In this analysis, overhead costs are grouped by activity and department and then allocated to products using appropriate cost driver. Unit cost. First, unit cost is calculated using a plant-wide rate. This method is simple but may distort costs across products. Next, a departmental rate improves accuracy by recognizing departmental difference, but it still does not capture activity complexity. Finally, ABC assigns overheads based on actual activities. This method provides the most accurate unit cost and is more suitable for the company. Selling prices are compared with unit cost for each flavor. Since selling price exceeds unit cost, in-house production is financially feasible. In conclusion, combining process costing with ABC provides accurate unit costs and supports effective pricing and production decisions.
Thank you for your attention.